Welcome to a special report on the gold commodity. My name is Dennis, and let's talk about the gold as trading in the futures market, gold versus the dollar. Gold prices ended yesterday's session at a downtrend by 3% after a breach of the key support level at 1130. 1130, it's a support area that we all know because we were talking about this level 2 days ago. We can see that this area was the support. If we look for the past, we see that it was a support one time, and although also this area not so clear, but eventually it's a support area, and the support area will break down. But the interesting reason it's not a technical analysis is eventually the fundamental perspective. And the fundamental perspective, we need to go deep. Many people ask me about the commodity and what to look for if there will be problems in the markets in the near term, in the short term, in the long term. So we all know that most of the people are looking for solid instruments. Eventually, the one that trading in stocks and commodities, they're looking to diversify their account, and they put 20 or 30% in stocks or in commodity or in forex, but 70% of the money or 60% of the money is looking for solid instruments. And the commodity gold in the past, in the history, as long as the history became, eventually it was a solid. And if we're looking for solid instruments, we have two solid instruments that in the past was very clear. It was the gold and it was the dollar. The dollar is giving us a very full sign of the largest economy in the world, the US, and the gold gives us a perspective of it's very correlated to solid in the long term. What happened is that because the gold is trading with correlation, a very good correlation to the dollar, many people left or leave the gold to the dollar, because what's happened is in the outlook for the dollar remains upbeat eventually, because expectation interest rates in the world's largest economy will rise sooner than later. There was many noises or sounds lately that the Janet Yellen, the president of the Fed, the US Fed, will say that she will go and higher the interest rate only in next year. But there was an interview with the president of the St. Louis Fed, Louis Bullard. He said that he see now the picture different. He see that 50% or more Janet Yellen will upbeat the interest rate, and if the interest rate is going up, eventually what is going up also is the dollar, and if the dollar go up, the gold will go down, because this is they trade, or they are in the same territory of solid instruments, and if the people will go, if the public will leave to the dollar, the gold will go down. So this is from the fundamental point of view. As we can see also in the technical point of view, as I mentioned before, the trading now is down, the trend is down. We can look also in the history in the past several of months. We can see that the trend is down. The highs are getting more and more low, the lows getting low again, and eventually we saw this sell-off 2 days ago, and it was very quickly because of the pressure of the traders. Okay, so I wish you all success, and we will meet tomorrow in our next webinar. Bye bye.